Hello investors, and welcome to Cruz Asset Management's video chart of the day. I'm Stuart Cruz, and we are going to be talking about the airline industry today. So let's get right into it. Up on the chart from our friends at White Charts, I have got the top three domestic airlines: Delta, American Airlines, and United Airlines. This is a revenue chart. So as you can see, Delta was leading the way. This is pre-COVID. So 5 years prior to the peak of the market of February 19th. So you can see how these things reacted. They're obviously seasonal. Over the last 5 years, they peak in June and kind of bottom out in March, where we would expect, or I'm sorry, bottom out in December, where we'd expect, very similar to the housing seasonality of the housing market. So these are the top three: Delta, American, and United Airlines. When I'm going to put a price chart on top. So here's the price chart of these things. So now it looks like they've been pretty stable as far as the revenue, and United seems to be taking a lead. Why would they be taking the lead if the revenue is roughly the same? Well, let's look at the earnings per share. So the earnings per share is down at the bottom. United clearly has a humongous edge in earnings per share, so that's why their price is trading, or stock is trading at a much higher price than the other two, American and United. But if we look at the normalized return, we will see that United Airlines and Delta have roughly the same return over the 5-year period, and then American has really struggled because the earnings per share really fell off. And let's add in a favorite of a lot of portfolio managers is Southwest. So Southwest's portfolio returned the best, 30%. Its revenue increased 30%, and its earnings per share was up nicely at 66. Now, if I take this back to an original level, you can see that Southwest's revenue lines are about half of the big three. Okay, but from a percentage growth rate, they're doing just fine. Now, post-COVID, post-lockdown, let's look at a one-year chart of all these. I'm switching this to basically 1 year ago today. Here we see the prices and a big fall off. And if I'm going to change this to a percentage gain, you see a sell off of about anywhere from 40. Well, Southwest was only down 30%. American, Delta, United down 40s and 50%. And that's because their revenue dropped 80% all across the board. 80%, almost 90% for Delta Airlines, Southwest, all in the 80% range. So it's amazing their stock did not even fall further than this. Furthermore, American Airlines earnings per share got crushed. So let's look at the actual returns, or the actual absolute numbers. American Airlines is now losing $8.50 a share. Going back to the pre-COVID levels, they were making $4.80 a share. Now they're losing $8 a share. United was making $12 a share. They're now losing $4 a share. Only Southwest is in the positive territory. They were making 47 cents when they were making $4.28. So at least they're positive. So what I would suggest is, if you're looking for an entree into the airline industry, and although airlines have basically almost always been a bad investment because they've always lost money as a cumulative industry, I would not go with any of the big three. I would probably go with Southwest. It's still making money. It's had the ability to make money throughout this loss, and it did not lose as much during the downturn of the coronavirus. So if we're looking at the price loss, the price was only down 27%, mostly because it's still making money, and I would think that that's going to be the first one to turn around when you actually see some increase, because if they're already making money, any incremental volume will help Southwest much more than it'll help United, American, and Delta. They're going to have a long way to go before they kind of pull out of their doldrums. So there you have it, the airline industry, domestic. That's Stuart Cruz from Cruz Asset Management with your chart of the day, and don't forget to invest with the odds in your favor.